Okay, we're going to talk about bank reconciliations in QuickBooks, and this is one of the processes that you would perform once a month to verify accuracy of your bank accounts and to identify any transactions that have been recorded and cleared. It's a great step. It's an important step, and it's really essential if you want to ensure that the integrity of your data and that your banking transactions were there were no errors or fraud. So you reconcile this. Now you can do this with each and every bank account that you have. Some organizations have two or three, but but the bottom line is once a month process. We're going to talk about reconciling your bank statement, creating reports, finding errors, and how to fix them, obviously. Make corrections, automatically adjusting your bank statement. What do we do with bounce checks, and also reconciling credit cards and online banking and those and the relationship with there. On the bank account, obviously, it's going to be reconciled each and every month. It should not be reconciled any more than that, but definitely not any less. It's very important that you get 1 month's worth of activity and then you analyze it, analyze the bank versus your books to make sure there aren't any omissions. Main thing is you're going to be working within the banking section of the home page. You're going to select banking, and then you're going to check your beginning balance with your bank statement, and then you're going to enter your ending balance. Now what you want to do at this point is matching the transactions that have cleared on your bank statement to what is located in your QuickBooks by clicking those. At the end of the day, you should have a zero balance, but each side of the reconciliation page, on one side is going to be banking information, and the other side is going to be the banking is going to be the checks, and one side is going to be the deposits or other credits. But if you look at the bottom half of the page, you can also know that you have to you manually put in your service charges if you have any, interest earned if you have any, and once you've cleared by clicking each one of these transactions, you should come down to a zero balance. And once you've done that, you can click on reconcile now. Obviously, this doesn't always work so easy. Sometimes you find errors. There is an area within QuickBooks that allow you to discover or to find errors if you were reconciling it and the balance does not come down to zero. You can also leave midway, which means you could come back and continue what you've done. And you can also undo what you've done. But let's continue. Running reports are just one of the backup that you attach with your reconciliation. The main thing is once you reconcile, you generate reports to document that you reconciled the account and attach it to the bank statement and file away. But finding errors is important because everything does not work automatically. Sometimes there are problems. You want to make certain that that if any transactions were voided or deleted, that since the last transactions, you'll find those kind of areas in the beginning balances and make sure to make those adjustments. Sometimes transactions are recorded incorrectly, and this is the best way to find a mistake. So you can use your reconciliation discrepancy report to help you. Sometimes it helps, sometimes it doesn't, but at the end of the day, if the transactions are entered correctly, chances are the balance or the check or the deposit may have cleared the bank at a different amount, and you need to check that as well. If you really feel that the reconciliation is inappropriate or it's just wrong and you can't fix it, QuickBooks does allow you to undo what you've done. And by doing that, you just click on Undo Bank Reconciliation. If you make a mistake, you fix it. You make it for bank a mistake, you put it on your transaction register and adjust to the bank balance, and then reverse it when the bank completes it. But again, I think it's all about your own internal controls. Now let's just talk about closing, entering transaction and close period. Generally, this should not be done at all. Once you close your books, any transactions that you have to fix should be done in the current month going forward. Very rare exceptions to going back, and it's not recommended, but you can, and this is just giving you an outline if you have to do that. And this is just showing you what happens when you have to QuickBooks automatically adjust your balance. And this would be in an extreme circumstance when you just cannot find what the difference is and it's highly immaterial. You may want to just allow the system to reconcile it for you. Now, for check balances, what do you do when a check bounces? Someone has written a check to you and your bank notified you that the check is not cleared. Well, you'll need to add 2 transactions. First of all, you have to reverse the amount of check that bounced, and then you have to create a charge in your check register to reflect the bank fee that they were charging you. And you can also charge your customer a fee for processing the bounced check by creating a transaction in your customer invoicing area. But if your check bounces, you enter the transaction and the bank says it was returned. If your check bounces, you have to actually go in your check register and code it bank charges that have incurred as a result of the bad check. And you also have to code. You will also have to record some entry if your vendor charges you for that bounce check. Now, the check generally with the banking system, the checks automatically go through twice. So if you get notification that your check is bounced, it's probably already gone through the second process, and you will not be able to reprocess the check. So chances are you'll probably have to void it and pay it again, or void it and pay with your credit card. Either way, you can do all of this within the QuickBooks system. Obviously, making payment arrangements is something you do outside of QuickBooks, but the final conclusion would be whatever you and your vendor agree to, you post it and you pay it in that manner. But voiding the check will be absolutely the first step in correcting the entry. Reconciling credit cards are very similar to reconciling any other account. As you set it up as a credit card account, and then you reconcile the transactions in with your current balance. Very similar, but also QuickBooks goes a step further, which allows you to write a check for the payment, all a part of the reconciliation process, which I think is extremely cool. And this is just giving you how to process transactions, online transactions. We will not be doing any online transactions within the QuickBooks system, but to note that using QuickBooks Online, this will allow you to download every single transaction that your bank has been presented with. Therefore, it's almost an automatic reconciliation. It's just a question of you entering the bank fees and any other charges that have not recorded. So, reconciling your bank statement at least once a month, no more than once. Twice a month is only if the account is very, very active, but generally speaking, once a month is more than sufficient. You create reconciliation reports, you find errors, and you correct those errors. And make corrections in QuickBooks automatically if you feel that the amount of an error or in the reconciling difference is so small. You can have QuickBooks make the adjustment for you. How to handle bounce checks and how to reconcile credit cards. And the role of online banking within QuickBooks. This has been your mini lecture on bank reconciliations. If you have any questions, by all means, post your questions in the Q&A section on the online course. Thank you. Thanks for listening.